All right, welcome to The Explainer. Today, we're diving into something that, well, it's a real head scratcher from Wall Street. We're talking about the semiconductor giant Applied Materials. They just had an earnings call that basically told two completely different stories, and boy, did it leave investors scrambling.
So let's get right into it. This is this central mystery, right? On one hand, the company comes out and says, hey, we just had our best quarter ever. Record revenue, record profit. And then on the other hand, you see the stock just plummet. It falls off a cliff. How does that even happen? It's a total paradox, and that's exactly what we're going to unpack today.
Okay, so before we get into all the doom and gloom that spooked the market, we really need to understand just how good the good news was. I mean, we're not just talking about a strong quarter for Applied Materials. This was a record-shattering performance. So first up, revenue. Check this out. $7.3 billion. That's an 8% jump from the same time last year, and it totally blew past what the analysts were expecting. I mean, think about that. That's a huge number for a company that builds some of the most complex machinery on the planet. And it wasn't just about the sales coming in the door, no way. Their actual profit, their earnings per share, surged an incredible 17% to a record $2.48. Again, just crushing the estimates. You look at these numbers and you think, wow, this business is absolutely firing on all cylinders.
And you know what? The efficiency was there too. Their margins were looking incredibly healthy, and they were even getting better. We're talking a gross margin of nearly 49%. That tells you they have some serious pricing power and they've got their costs under control. So let's recap. Record sales, record profit, killer margins. What on earth could possibly be the problem here? And that right there is the million-dollar question. If the quarter they just finished was so perfect, what was it about the future that sent investors running for the hills? The answer, it turns out, wasn't in the numbers they just reported. Oh no, it was all about the forecast for what's coming next.
And here it is laid out in black and white. This is the problem. You see, the guidance for the next quarter, it shows a pretty sharp drop. Revenue is expected to fall from that record $7.3 billion all the way down to $6.7 billion. And earnings, that beautiful $2.48 per share, yeah, that's projected to drop to just $2.11. That is a huge, huge decline, and that is what sent the stock into a tailspin. So, okay, the natural question is, why? Why the sudden slam on the brakes? Well, to his credit, the CEO, Gary Dickerson, he didn't try to hide from it. He got right on the call and laid out three specific reasons, three headwinds as they call them, that are clouding the picture for the next few months.
So what are these three things? Well, first, a slowdown in China. Second, a big backlog of export licenses. And third, something they call non-linear demand from their biggest customers. So let's break each of these down. And we're going to start with the biggest piece of this puzzle, which is China.
Okay, so the whole situation with China, it's complicated. You see, for the last couple of years, China has been this massive engine of growth for Applied Materials. Just huge. But now that whole dynamic is shifting, and it's shifting fast. We're going from a huge boom to what the company is calling a period of digestion. And if you want to understand just how big of an impact this has, you just got to look at the numbers. In that amazing Q3 we just talked about, China made up a whopping 35% of their total revenue. 35%. But for the next quarter, they're guiding for that to drop all the way down to 29%. That is a massive hit in what is, by far, their most important single market. So you're probably asking, what the heck is capacity digestion? Well, it's actually pretty simple. Imagine that Chinese chip makers went on a massive shopping spree in 2023 and 2024, just buying tons and tons of new equipment. Now, they kind of have to hit pause to install all that stuff and get it running. They need to digest all that new capacity they bought. It really is like the analogy here. You buy a year's worth of groceries all at once, you're not going to need to go back to the store for a while, right? Same idea. And as if that slowdown wasn't enough, there's another problem layered on top: regulations. See, Applied has this huge backlog of applications they filed for licenses to export their gear. And for this next quarter's forecast, they've basically played it super safe and just assumed that none of them will get approved. So that just adds a whole other layer of uncertainty to the China picture. All right, so that's China. Let's move on to the third factor, because this one isn't just about China. It turns out that even the demand from the biggest, most advanced chip makers in the world is getting, well, weird. It's becoming a lot harder to predict. The company is calling it nonlinear or choppy. So why is it choppy? Well, the big reason is that the whole industry has consolidated. There are really only a few giant companies left at the top making these absolutely massive orders. And because there are so few of them, the timing of when they place those huge orders is really uneven. It's not a smooth flow. That makes trying to create a predictable quarter-by-quarter sales forecast, yeah, pretty much impossible. And look, this isn't just some abstract theoretical problem. We're seeing it have a real impact on the numbers. The company actually had to lower its full-year sales forecast for equipment tied to what's called gate-all-around, or GAA. That's the next-gen transistor tech. They were expecting about $5 billion in sales, and now they're saying it's going to be more like $4.5 billion. That is that choppy demand right there in action. Okay, so let's be honest. That is a lot of bad news for the short term, right? You've got the China slowdown, the regulatory mess, the choppy demand. It sounds pretty gloomy. But, and this is a huge but, despite all of that, the company's long-term story is still incredibly optimistic. And it's all centered around one massive, game-changing trend, AI. And you can hear it directly from the CEO, Gary Dickerson. He's laying out this huge, big-picture vision. He's basically saying that the global race for AI leadership between companies, between countries, is going to drive massive, multi-year investment cycles in exactly the kind of tech that Applied builds. He sees this not as a short-term thing, but as a fundamental, structural shift in the entire industry. And their plan to cash in on this AI boom is super specific. It's not just talk. They're laser-focused on the critical building blocks. Things like those gate-all-around transistors, which are needed to make chips powerful enough for AI, or high-bandwidth memory, HBM, which is what you need to feed these hungry AI models all the data they crave. And then there's advanced packaging, which is the magic that ties all these super complex pieces together. And again, this isn't just wishful thinking. They've got a real roadmap with concrete milestones. They're talking about their packaging business more than doubling to over $3 billion. They see a point in 2026 or 2027 where those gate-all-around chips finally hit mass production. And they're looking out to 2030 and seeing a $9 billion market for power chips just for data centers. These are the big bets they're making. So this brings us right back to where we started, back to that paradox. What we're seeing is a classic Wall Street story. You've got the market, which is totally fixated on the next 3 to 6 months of uncertainty and reacting really badly to it. And then you have the company trying to get everyone to look at the next 3 to 6 years and this massive technology shift being driven by AI. And that's really the big question this whole thing leaves hanging in the air, isn't it? Is the market's fear about these short-term bumps in the road justified? Or is all that fear making everyone miss the boat on a much bigger, much brighter, AI-powered future? Well, only time is going to tell on that one. Thanks for joining us for The Explainer.